What's up? Good morning, everybody. How's everybody doing? Good morning, David. Welcome in. We have a busy day. We had ADP non-farm payroll news this morning, I believe, already at 8:15. Not a ton of reaction, kind of a tape bomb a little bit, but stuck in this consolidation range. But the big thing is we got FOMC rate later today, so that is going to definitely impact how we approach trading today, or how I approach trading today. Good morning, Ray. Welcome in. Good morning. Kind of in the same consolidation range that we've been in since yesterday afternoon. So, good morning, Anthony. Welcome in, welcome in. How's everybody doing? How's everybody feeling this morning? Good morning, good morning. So I didn't take any trades on stream yesterday, but I did call the setups. We called that one short setup that did work out. After the stream, there was another setup, if you guys remember, that I called for. I was looking for a bottom reversal scalp off that 6,400 area. I did see good confirmations and took it down there. It was about a 4 or 5 hour trade. I was risking, I think, a little under 400 to make 2,500. So I did end up taking that setup. Hopefully some of you guys saw it. It played out later in the afternoon. It did lack continuation. I just targeted those 64 16s. So let me just drop. I'm just going to recap this for you guys since it was part of the stream yesterday. I talked about the setup, but it played out later on after the stream ended. So down here after 11:30, I caught longs down here at 64.02, and I traded up to here 64.16, 17 area, which is this key level up here. Where I got those levels from, one is just 6,400 is a key whole number, and it was also these prior lows at the low of this kind of consolidation range that we've been in. You can see where it's marked there. And this was the top of this consolidation range where there was a lot of buyers yesterday. So I was looking at this as a support level that broke, so it could turn into a possible resistance level. I look, if a level is a prior support level and we break back below it, I look at it as a possible level that could become resistance, and it did. We got a little bit over it. I did keep holding up here, so I gave back a couple points and I trailed my stop. So on this aggressive break over it, I trailed my stop to this level because I did not want to see us recapture back below it, and in fact we did, and my trailed stop hit and took me out of the trade. So that was yesterday's trade. Again, that setup was from the game plan yesterday, but caught it after the live stream ended. So looking at today, we are in a tight range, not super loving location, but I'll get into the game plan in just a minute. Let's see who all's in here. Good morning, Blair. Welcome in. Dogfish. Good morning, Victor. Good morning. BW. Welcome in. Left early yesterday, but saw the trade. It was good. Thanks, Stelios. 64.20 today, why not says. We'll see. Yeah, this prior little high here. Good morning. Welcome in. Oops. So, pretty tight range today. We'll start going through the analysis. I'll be just brief here with the higher time frame. Obviously, we're at near all-time highs. We've pulled back after gapping up to those all-time highs to start the week. And since then, we've been drifting lower. We are testing and consolidating in this area, which was prior consolidation over here. But I don't really consider this super key. There was a lot of consolidation here. We are dipping into that. Now that we've already dipped into here once, I would really want to see if buyers are going to be strong for a rally this morning to hold above those 6400s. If we dip under those 6400s again, I'll probably be just kind of cautiously watching for a further drop. And either I'll look for a break and retest short now. If we get under this area and target this demand area down here where I have circled, this was this large rally day that broke out new all-time highs. So we had prior all-time highs. We had this period where we consolidated that you can see for like almost 2 weeks. We broke out, pulled back, held it, and rallied. So this is kind of a key demand area for me, just looking at the 4-hour chart here. Let me flip this around so you guys can see on Instagram. I'll try to do this. So this is that area that we consolidated, rallied, gapped new all-time highs, pulled back. We are bouncing off of it, but again, in the short term, like this morning, I would really want to see us not really take out these lows below 6,400. Maybe if we dip out and take out this overnight low here around 6,405 and double bottom off that. Yeah, if we maybe do like a double bottom off that or something, that would be interesting above these 6,400s. But if we break under these 6,400s with some strong selling, then I'll probably be cautious about trying to buy the dip again. And it may want to dip further down here under these 90s into this kind of demand area where I have marked these few levels here. Really between 63.74 and 84, that kind of 10-point range is the next area that I'm watching. Again, it was these prior highs. Again, it was kind of resistance. We sold off once here, attempted to sell off, and then broke out aggressively, and really large aggressive rally off the break of this. So this is a key spot that I'm watching. And then specifically within that range, these 3 levels are areas that I'm watching. That is 63.83, 63.78, and 63.74. So this morning, the main setups that I'm watching would either just be if we get a quick little pullback. So the main thing that I'm watching for is just a quick little scalp this morning. So let me take a step back. We have FOMC rate decision coming later today. There's probably going to be a lot of sidelined capital until that news comes out, until till the dust kind of settles after news like that. So if I trade at all today, this morning, I like it to be earlier in the session, not later in the session. The closer we get to news, the tape gets thinner, volume and volatility gets trickier. Sorry, let me mute my computer here. The volume and volatility gets trickier, and I like to just at that point wait till after news. So what I'll be looking for this morning is just a quick scalp, not trying to hit a home run on a large continuation. It's typically less likely to see a large continuation ahead of news. And we can already see that kind of forming up since yesterday afternoon. In my opinion, what we see here is basically the consolidation range starting from, we had a nice little drop yesterday AM. And then since then, I think this is call it the waiting for FOMC consolidation between 6420 and 6400 down into this wick here. If we do manage to break under here, then that could be a situation where kind of price precedes news and we're going to go take out lower levels, in my opinion. So I'm viewing this as a consolidation range here. Upper end of that being 64.16 to 64.20, and lower end of that being 64.05 into the 6400s. So the main thing that I'm watching here this morning is if we get a little dip down into here, again, double bottom above yesterday's lows. I wouldn't really want to see yesterday's lows taken out at this point. And then just target a break back into the middle of this range, maybe scale out in the middle, and then target the high of the range if buyers want to go sweep out the highs around 16 and maybe into 20 if buyers are feeling really frothy. So game plan today is risk management, risk management, risk management all week. We have NFP this week, FOMC rate decision this week, like I've been preaching all week. I am not approaching this with the mindset of let me flip crazy returns this week on a crazy move. I am approaching this with the mindset of these are very tricky conditions, very unpredictable news reactions, and sudden spikes in volatility, et cetera, et cetera. So let me just focus on protecting capital. If I see my setups, great. I'll take my same repeatable setups that I take any day, any week. I'm not a news trader. I don't have a strategy specifically around trying to catch news moves. I trade the same setups day in and day out, but I tweak my approach slightly depending on the conditions. And in these conditions, trying to just look for a quick scalp, especially early in the day, before volume and volatility really starts to dwindle ahead of the news. So if we do rally up here and we go and take out these highs at 16 and 20 and really below probably 23, I think there's a lower volume area yesterday. If I remember, I didn't look at this yet. Yeah, there's a kind of a low volume area, low volume node between 24 and 21, 20. So if we go take out these highs and test that low volume node area between like 24 and 20, then that's an area that I'd potentially watch for shorts. And again, just target the middle of the range back down here. If I took it in the 24s, 20 to 24 range, I'd probably just be targeting these pre-market lows down here, maybe around 64.08. Nothing. Again, I'm not looking for a crazy windfall move. I'm not looking for a crazy trending move. Just looking for quick scalps early before volume and volatility get trickier before the news. And honestly, if I do catch a setup this morning, even if it's just a little scalp, I probably won't even be around for the news later today. If not, maybe I'll walk away and I'll come back. I'm not going to trade the news, but maybe 30, 45 minutes after the news, after the dust settles a little bit in the last hour, maybe I'll see if a setup comes up. Do you want to watch out if at any point today with this news, if volatility increases drastically, you want to be mindful of your position size. Make sure you're not, over risking. Make sure you keep your trade risk consistent. That's what I do. I try not to. I don't want to trade one trade where I'm risking $300 and the next trade is the same position size, but that trade I'm risking like $600 or $800. You know what I mean? Try to be consistent, like on a monthly or quarterly basis about the risk that I'm putting on for trades. So what that means is when volatility is much higher and you're not pinpointing as close of a stop loss and you have a little bit wider stop to account for the volatility, then your position size is a little bit lower. I'm just looking at this lower volume area from yesterday. If you look at the volume profile from yesterday, there's kind of a low volume area between 64.24 and 64.21 when price sold off pretty aggressively yesterday. And it left kind of that lower volume area because sellers were so aggressive. So we'll see if we come back up there and test that area. Like, that's the whole point to me, like viewing the market as an auction and seeing like a lower volume area like that. That just tells me like sellers were so aggressive there. So many people wanted to sell at that price moved quickly below there to find buyers. So if we come back into there and at that price, people are still wanting to sell aggressively, then we'll possibly capitalize on that with a short setup and just target a drop back into probably this higher volume area that's forming here between 64.09 and 6408 and 6412. It's kind of a lot of volume building up there. So if you think about it, just from an auction perspective, if price is kind of forming like a mountain on the volume profile, it's spending a lot of time there. That means, for relatively speaking, there's not a significant imbalance, right, in the auction. Buyers and sellers are agreeing on price. And so the moves come when there's a significant imbalance. When there's way more people that want to be a buyer than there is a seller, price goes up. And there's way more people that want to be a seller than there is buyers, price goes down, to facilitate the auction. So that's, to me, the importance of looking at the volume profile, is just to understand what the auction is doing. And so right here, we're consolidating in this range, which just tells me buyers and sellers are agreeing on price. There's no significant imbalance that I'm reading right now, which just means there's less opportunity as a day trader to capitalize on an imbalance when price moves from one place to another. Because ultimately, that's what we're doing, right? We're just trying to, as a day trader, I'm just trying to capitalize on an imbalance that occurs and price is going from one point to another point. When that imbalance occurs, that's when you get those price consolidates, buyers and sellers are agreeing. There's an imbalance, price expands or up or down, and then it gets to a point where it consolidates again because buyers and sellers are agreeing. So that's where I take profit. Just capitalizing on the imbalances that occur in the market. So in that little rant there, but just that's how I'm viewing this current structure. Here, I'll flip my screen over to show you what I'm talking about on the volume profile here this morning. Since it's relevant, we're talking about game plan for the day. Good morning, Johnny. All right, which screen is it? Yep. So just looking at the volume profile here. Oops, there we go. Just looking at the volume profile here. This is what I'm talking about. We are forming a lot of volume here. This is the volume profile on the day. 30-minute candle chart. So you can see since yesterday afternoon when he dropped, this is where I could see I spotted those trap sellers down here. I capitalized on that long back up into here. But since then, I guess we did go take it out one more time late yesterday afternoon. But again, wicked up quickly. We're pretty much consolidating between this range. Look at all the volume that built here. And again, almost the same area. Look at all this volume that's built here. So a lot of volume building. There's no significant imbalance here between buyers and sellers. So we'll see if price does pop up here and it's short-lived and nobody wants to be a buyer up here anymore and a lot of people want to be sellers, then we'll look to capitalize a short possibly in this 24 to 21 range. And this is that area yesterday where I saw this kind of lower volume. You can see where price sold off pretty fast here. We can see that that's an imbalance in price. There was a lot more sellers than there were buyers, and so price moved down quickly. And even on the 30-minute for the ICT recovering traders, we can see an imbalance here that formed a fair value gap or an inverse fair value gap right at this low volume node area. But it didn't form because of the candle pattern. It formed because of volume. A lot of people were selling, so it didn't give price enough time to transact here, which left this lower volume area here. So what that tells us is just that that's a potential area here that sellers may still look to be aggressive at this price if we come up there. And if they do, then we'll try to capitalize on that imbalance and reversal back to this higher volume area where buyers and sellers were agreeing on price. The tip to zoom out on Bookmap you gave the other day has helped me not jumping into so many premature trades. Many thanks. Awesome. Yeah. When in doubt, zoom out. Bookmap, candle charts, whatever you're looking at. always try to maintain perspective and not get so locked in on minute price action. You really want to hone in like that only at key specific levels. All right, guys. So for those of you on Instagram, I'm sharing my screens and talking through all this on YouTube. The link is in my story and the link is in my bio on Instagram. I recommend joining in on there. I'm going to go ahead and end the stream here now on Instagram, but I will be staying on for this morning trading session on YouTube. So see you guys. Explain, Walker. What do you want me to explain a little bit more of the volume stuff that I was just talking about? I'm trying to be brief here because the trading session is about to start. So sorry if I was a little fast and a little brief with that. I don't really have time necessarily to go into a deep lesson, but the moral of the story is there was really aggressive sellers here. We can see that because price did not transact for a very long time here. And we sold off aggressively. The bookmap thing, yeah, I'll go ahead and shift my screen over to bookmap now. So what I was saying was, in that tip that I gave the other day is normally intraday, when I'm looking at a key area to take a trade, I'm looking at very close time intervals on bookmap to see like the most specific real-time orders as they come in the market, maybe like the 5 minute down to the 2 minute, sometimes even down to like the 1 minute and 30-second interval. I'm talking about this time interval down here. But often throughout the day, I will zoom out all the way out like this and view like the 30-minute time interval to really kind of see the whole day. And you can really see like what stands out. Like there's a lot of like, just look at the relative size of the bubbles down here. There's a lot of selling down here, price bounce. So throughout the day, I'm always trying to not overly analyze just a specific lower time frame area like on bookmap like this. I'm changing my view and making sure I maintain a perspective of, you know, price overall on the day and where we're at. Good morning, Andres. Does that make sense, Javon? So pretty simple game plan in a nutshell, looking at a consolidation range, looking at a fake out from the high or the low of that consolidation range. It may or may not occur. And even if it does occur, I may or may not see good confirmations to take the trade. We'll see how it sets up. And if we go blast out of the high or the low and I don't see good reversal confirmations, I'm not going to just immediately jump in short or long on it. So just because sometimes a setup does occur, but I just don't see good confirmations to take it with a risk and entry that I like. So I just don't take it. So definitely cautious and patient this morning, not rushing into anything as always, but especially this week. Like even recently, even just like earlier this year and last year, guys, I would just take the trading week off when it was FOMC rate decisions or NFP weeks. Those 2 weeks have tend to be problematic for me, just because I think what it is a lot of quick large moves tend to lack continuation. So there's thinner tape, large quick moves occur with like news. And then, so it's like a fast, slow game, like red light, green light, right? Price speeds up and it makes a move and then it stops and goes back to consolidating. And it speeds up and makes a move. So it's tough unless you're positioned in it before it happens. And then it's just kind of wonky. A lot of larger funds are probably balancing positions and hedging and things like that. So those 2 weeks, FOMC rate decision weeks and NFP weeks. And this week is both. So I'm doing it live here with you guys, but I'll be honest, I've had a lot of unprofitable weeks in the past on these NFP and FOMC weeks. So I'm being very defensive and cautious, and I'm okay with not taking trades. So Monday I took a trade break even, I think. And then yesterday I waited all day until the afternoon. I caught one quick scalp and made like 2,500. So I'm cool with that. I'm cool with just, continuing to be defensive. So a lot of selling right off the get-go here. There was the 9:30 bell. I muted my computer, but a lot of selling right off the get-go, dumping lower. Does that all make sense for you guys? Yeah, exactly, Blair. Exactly what you said. Balance rules are, I look to fade the extremes, and I wait for really good confirmations and stay away from getting chopped up in the middle. Yep. Oh, welcome in, Joe. I didn't see you here earlier. Did you put a chat? No. Yeah, welcome in, Joe. Ishan, welcome in. So quick little drop here. So far off this open this morning. Again, I like to fade the extreme, but if sellers are looking pretty strong at the lows, especially under like 6,400, that area that I talked about, I'd rather see a bounce above that. If we drop strongly under 6,400 in yesterday's lows, I'm going to be cautious. Hey, good morning, Andrew. Welcome in. All good, Joe. Yeah, always have your own game plan. And I share this not for you guys to copy my trades. I share this just to help teach you guys the analysis and how I trade, and just entertainment and educational purposes. By all means, like, trading is risky. Don't just follow me. It would be impossible for your results to be the same as mine over time, because it'd be impossible for you to copy all mine. And in the short term, results are random. I can take wins and losses. So just understand that. Never put money in a trading account you can't afford to lose. All the typical safety warnings about being involved in the financial markets. In your words, Burner asked, how do you determine... Sorry, I'm trying to watch this and answer your question at the same time so I don't miss a trade. Hang on. Burner, I would say you could go back and watch the live streams if you already have. I try to explain that, but he's basically asking what's the difference between seeing aggressive selling and seeing absorption. And I would say they're the same thing. The difference is that when you see that aggressive selling, that does not move the price any lower, and then price moves the opposite way despite all of that aggressive selling, then that tells me obviously absorption, as we say, is just a passive buyer. There's a larger passive buyer than there is aggressive sellers. So if you see a lot of aggressive selling and price doesn't move lower, and in fact it does the opposite thing, then I would get in a trade speculating that the passive buyers there have larger size than the amount of people that are willing to aggressively sell the market at that price. And then once that reversal starts happening, all those people that did sell into that passive buyer are going to start, triggering their stops as price moves the other way. And then that just adds more fuel to the reversal because their stops are buy stops. So they have to buy back the positions they sold short. And so that's when you get that quick reversal that I look to capitalize on. I don't see anything too significant. We did tick that 6405 level, just literally to the tick, that level that I have marked at 6405. I would have liked to see a little bit more of a dip under it that actually trapped sellers. I didn't quite see that. We did bounce with aggressive buying off that level pretty much immediately. We did see some selling down into here. These bids did get filled, and now we sharply bounced. We did test this right here. That's that level that I talked about. And you can see where that got filled. And we can see the resting orders there on that heat map as well. So I was looking if we drop down here a little bit more, and I saw like a large sell bubble, and this bid actually filled down here, and we kind of swept under those 05s. But we kind of ticked it at the 05s and just immediately shot up, and I didn't see an entry for me. So it's already up 5-6 points from that. So I would have liked to have been a buyer at the 05s. Like if we faked out here, large selling failed, quick pop, retest 05s, and just like maybe a 2-point stop loss. We ticked it while I was talking and just immediately shot up. Not really a chance for me, at least, to be a buyer. I guess it could have been a buyer here at the 07s and put a stop under the 05s. But I'm just gonna wait. It's a little soon. It's 9:36. Let's be patient. So there is a lot of buying after hitting that level to the tick, but not chasing it on my end. It was very fast. Also dipped below recent pre-market lows and quickly recovered. I remember you taking similar trade to this. Yeah. This is a setup that I trade often, especially in the morning. Fake out on a consolidation range under a prior low. I was talking. Two, I was more looking at this 6405 level, which was where these were on. It was the overnight low there from 1 a.m. And I was looking at these to get filled. And so we did drop down there. But then we just immediately shot up, and I would have liked to see some larger failed selling right here. And we didn't, and we shot straight up. And so I didn't see a good entry trigger for me to click buy. But this is a setup if you follow me on Instagram and stuff, this is definitely a setup that I've shared recaps about before. But we're right in the middle of the range still. Again, 6,400 to 6,405 being kind of the low of that range, and 6,416 to 6,420 being the high of that range. So we're smack in the middle. Zoom out. been in the middle of this range, even since the pre-market. Same range here. I think the hardest thing for guys to get is entry, meaning getting an understanding of Bookmap and exactly what to look for in the bubble formation. It really depends, because like no two exact trades are exactly identical. But like in this setup that I'd be looking for, I would have liked to see a little bit larger selling bubbles into here. And then I do like this, how he aggressively popped back above them, and then a pullback with weaker selling. Just generally speaking, I like to see the trap participants. Then I like to see aggressive participants move price against them. And then I like to see one more little pullback with smaller selling, or whichever direction I'm looking to trade, to kind of confirm like there was aggressive selling, large size, they got trapped. Now there are, so one, we see there are trapped people below this level. Two, now we see there are aggressive people in the opposite direction looking to move price the other way. And when we pull back, three, there is weaker selling, meaning like the selling has dried up. There's not as many people looking to be a seller. So what that tells me is like the chances, like seeing that weaker selling on the pullback, then we've confirmed there's trap participants, we've confirmed there's aggressive, strong buyers, and now we've confirmed that there are less and less sellers and weaker pullback. So there's a more likely chance that we have formed bottom and that we will not break below that unless something new comes in. And sometimes it does. Sometimes all of a sudden out of nowhere, more large aggressive selling comes in and sweeps you out. That's why you have a stop loss. But we're kind of seeing that form here with trapped sellers down here. It's just not very much, so I'm not really putting a ton of significance on it. And then we saw this quick aggressive buying, which I would like to see. And now we're seeing a little bit smaller selling dwindle on this pullback here. So this is kind of, structurally, just thinking about the auction, this is kind of what I would be looking for. I'm just not seeing like so much size and activity. I guess part of that is just kind of gut feel and experience. I'm just not seeing like so much pace of the activity that makes me think it's a good one right now. So a lot of it comes from, I guess you could say, feel, intuition. That's just kind of subconscious, just based on the 10,000 plus hours I've put into watching live price action all day, every day. There's just nothing that can replace that. Like your conscious mind can only understand like so much. And I know this sounds like kind of fugazi, but hear me out. Like this is the same thing in professional sports and everything. Like there comes a point where you have so much experience and so much time. Like think about like a baseball hitter. Like your conscious mind cannot think fast enough to understand like the pitch that's coming 100 miles an hour at you. Same thing with Bookmap. So it's almost like I understand these things. And I have so much experience with it that I'm trying to translate to you guys so you can develop that for yourself as well. But you have like a intuition from it, just from the subconscious mind of learning, that you've seen things so many times that is so much faster in response and understanding than what you can like think in your conscious mind and communicate. So it's kind of hard sometimes to communicate those kind of things. There are specific patterns that I can clearly call out and communicate, but like in this instance, when I'm just watching this and I'm trying to describe like the price movement and the pace of the market and the size of the orders and things like that is just kind of a feel, intuition thing, subconscious learning from just tens of thousands of hours of experience. Yeah, so it sounds like you're really proficient with the technical analysis. It's just the entry confirmations part. Yeah, I mean, one of the things that will help the most is just going back and reviewing like where reversals have happened, both recently and like over time in the past, and just really see for yourself. Like go in, replay bookmap data. It's probably the best way to visualize it all in one place, and just do that hundreds of times every little reversal, and you'll start to see things for yourself and how they play out. But generally speaking, just as a rule of thumb pattern, I would want to see selling down here, like we saw that trap them. And how do I know they're trapped? Because they were sellers down here. Price didn't go any lower below that 6405 level. And then we bounced aggressively. So that told me, buyers were aggressive. And then here, as we pulled back, this is weaker selling. So trap selling, aggressive buying, weaker selling, entry. I didn't take it though, because it's just too much in the middle of the range for me. And the size of the orders and stuff just didn't make it look so interesting for me to be A+. But it did work. Trap selling, aggressive buying, weaker selling. So where you take an entry on that, you can take an entry down here. You could take an entry as this is forming down here. The probability of it working will be lower because we haven't really confirmed more confirmations of aggressive buyers and weaker selling, but your risk is also lower. Or you could wait and take an entry up here on one of these pullbacks at 09. Your risk is greater, but the probability is also greater because we've already confirmed that there is aggressive buying here. So it's kind of where you take an entry is kind of a delicate balance of probability and risk. And sometimes I do both depending on the setup. So if we pulled back here and I took an entry up here, I'd maybe be in with a little bit smaller size and have a stop loss down here. If I manage to snag an entry like down here, say I saw these trapped sellers here, say if this was a little bit larger and this bid down here fully filled, then maybe I would have just immediately got in here at the 06s with larger size, and I only would have had like a 1.5 or 2 point stop loss right here. But say we didn't see that and I said, okay, let me take an entry up here, then I would take a smaller size entry and I'd have a stop loss down here. But in this situation, I opted not to do that just because of the location, this being kind of in the middle of the consolidation range. So hopefully all of that helps make sense to you guys. Drop a like and comment if all of that helped you understand what I'm talking about here. Cool, cool. Ray said helps a ton. Joe said, yes, it helps. Good. So pretty large sweeping selling that came in there. And this is kind of what I'm talking about, guys, just being in the middle of the range. Just experience. I've seen stuff like this happen so many times. Jorge said, yes, that helps a lot. Awesome. Good. Helps me out if you guys just drop a like and share so we get more reach in here. Appreciate everybody tuning in. We have a lot of the same people every day, which is awesome. Got a good group going. We're being cautious and minding risk management right now in the middle of this range, ahead of FOMC news later today. Thanks, Brian. Thanks, Mike. All right, so we'll see how this develops. Yeah, speed of the tape for sure is for sure one of my confirmations, but it's hard for me to like quantify that for you guys. It's just something that comes with experience. A lot of new traders, a lot of lesser experienced traders, and I'm not trying to sound like, oh, I'm all this or all that. I'm not. I'm just a dude, but just pointing out a lot of lesser experienced traders will try so hard to be a part of any action that they see and force trades, and sometimes they make money, and unfortunately that reinforces the behavior of just jumping into positions without good context, without good confirmations, etc. And any bit of money you make doing that is not earned money, and that can pretty much 1,000% guarantee you will lose far more in the long run. So not looking for action, looking for good confirmations and repeatable setups. Especially, there's just a lot of things that make the current conditions difficult. So if you've been struggling recently, this has been a tricky month for me as well, but summer conditions, volatility tends to be lower. It can be very difficult and punishing for lesser experienced traders. A lot of comebackers, a lot of trades that go and come back on you, a lot of fake outs, a lot of trickery going on with that, as like larger positions have to like really work to get filled, sweep liquidity a lot. So lots of things about that. And then same thing at all-time highs. It can be very tricky. Sharp pullbacks can lack continuation. So you lack continuation downside, and then you kind of grind higher, kind of stair step up, elevator down in a way that can be very punishing to traders that aren't experienced with those conditions. And then the cherry on top, with this being such a high impact news week, this is a very pivotal week on the future market direction. So there can be a lot of back and forth in the market right now. So there's three things: summer, all-time highs, and high impact news weeks like FOMC, NFP. All of those things can create market conditions that we're seeing that can be very brutal and punishing to inexperienced traders. And that was part of the reason I chose to do this live streams every day this week for you guys. Even if nobody makes money, but I just help prevent people from blowing up their money, then this is a win. You people, let me know if you like it. I will share the document with you. I'm not sure what you're talking about. I haven't gotten a chance to check DMs and stuff right now while I'm trading, but I'll check after and let you know. Not sure what you're talking about. Yeah, I'm still watching it, but it doesn't look as good now just because we dipped and popped and now we're coming back down with heavier selling. So if we saw a nice drop that trapped sellers off the open, then that would have looked great. But we dipped, popped up here with aggressive buying, and then we dropped right back down with larger selling now. So contextually, the level doesn't look as great anymore. But we'll see if we get a nice sweep under it and recapture. If I see really good confirmations, I may take a stab at it. Yeah, Mason Jar said July's been brutal for me. Yeah, like I just told you guys, don't feel bad if you're struggling right now. Like these, I'm not blaming the conditions. We don't ever blame. It's on us, right? It's not the market's just going to do what it's going to do. It's on us to change. It's on us to find what works. But just understand that summer volatility, all-time high conditions, and especially like on a week like this being NFP and FOMC rate decision, there is a lot on the line and a lot of back and forth tug of war in the market, and it can be very tricky and brutal conditions for newer traders. I've been saying for the last month or two, like just like hashtag surviving summer. I'm making money, but I'm inching it along with little scalps right now. I haven't really had a lot of large banger trades. Actually, 2,500 yesterday was my biggest trade of the month. And it was on like a 15-point trade, or yeah, something like that. But the biggest thing is just not losing money. Like just eliminate bad unnecessary trades and keep the money that you make. Isaiah said, been following on IG for a couple weeks and just subscribe on YouTube. Really good stuff. Excited to be here. Appreciate the help. I appreciate you being here, Isaiah. Welcome in. Had a whole lot of break-even trades this month down to our 20% win rate. Honestly, pretty good, all things considered. Yeah, honestly. My trading places more emphasis on risk versus reward than win rate. I have had profitable months with a win rate as low as like 20 something percent. And I've had really good months with a win rate as high as like 60, 70%. I don't think I've ever had, I think the best win rate month I ever had was like 70, 75%. And that was like last year in like February or something. It was just a banger. I think I closed the entire month with, didn't have a red day the whole month. And not in terms of profit, but just in terms of win rate. That was the best month I ever had. But it's just rolling the dice. That's how it goes sometimes. But it's a lot easier to hold big wins and have not need to be right often, because your wins are so significantly much larger than your losses. That's a much easier way to trade, especially as a day trader. But it's even for me, it's hard to hold on to winners sometimes, especially when you're constantly feeling like you're fighting back out of a hole, and the chance to cut a little bit of profit and take a small shovel to get out of that hole is there. It's hard to hold that winner for those high R trades. It's hard. But not holding your winners is probably as big or bigger of a problem than not cutting your losses. I think most people understand the need to cut their losses. A lot of new traders don't, like early on, and you can hold some big, massive losses, just refusing to accept being wrong. But I think, could be wrong, but I think, at least for me, and I think a lot of people learn pretty soon to cut small losses. But the other side of that is, okay, you have to hold your winners. Sun Jin Kim, can you tell us about your service? Is it live screen, Discord, or YouTube? I don't have any service. I'm just on here for free to help you guys right now. I don't have anything to sell you. I'm a trader, so I'm sharing what I'm doing anyway with you guys. I get constantly asked 10, 20 plus times a week if I'll do coaching, if I'll do my own mentorship Discord, whatever. I participate in the Invest to Trade Discord. I'm just a member in there. But right now I don't offer anything myself, but maybe I will in the future. I don't know. But Kyle asked, what do I look to hold my runners? Well, first of all, I try to be more hands-off, and I try not to overanalyze every tick in price. I going into the trade, I already have a target in mind of where I think is a reasonable place price should go if I'm right. And so I try to at least hold for that. And then I try to zoom out a little bit, step back. You'll see me sometimes I have a putting green in my office. You know, I'll kind of set my orders and just take a step back from the computer and go putt some golf balls. And, you know, try to be patient. I like what Hormozy says, patience is figuring out what to do in the meantime. So if I'm trying to be patient with a winning trade, I try to take my hands off, set my orders, and go sit back and putt some golf balls, something like that. And then the other thing is, like, once we hit my target or above, or if I'm scaling, depending on the position, then I'll kind of look for like red flags in price. And a lot of those red flags are entry confirmations that I would use for a short trade. So if I'm in long and we're past my target, and all of a sudden now I'm seeing things that I would see for an entry confirmation for a shorts trade, then I'm probably going to take my profit and walk away, if that makes sense. So if I'm in long and we're past my target, and now I'm seeing things that would normally make me go short in the market, then I'm going to take my profit off on my long trade. But be cautious of overanalyzing stuff before your target and doing that too soon. Well, so as expected so far this morning, we pretty much got the setup that I was looking for, which was the drop into 64.05 and then the pop towards the highs towards 15 to 16s. But we just didn't come as low as I wanted to get an entry, and we didn't quite go as high as I wanted for a target. So we got the setup. It happened. It just didn't go as low and it didn't go as high. It's just stayed smaller in that range. So I'm just sitting out. I am good at that, overanalyzing. Ask me how I know. Kellen Rock, we're all good at that. If you're trying to be a trader and you're here, you probably have a very analytical mind like me. And so you probably overanalyze some things and hurt yourself more than the markets hurt you. You hurt yourself. So I'm only telling you guys things that I've lived through. I've been trading opened my first trading account 9 years ago. And I've been trading like full time for like 5, 6, 7 years. So I'm only telling you guys stuff that I've lived through, man. Kenny, no trades taken for 3 days. Hey, if you have the discipline to sit cash in the market, then you're on the right path for sure. If you're not already, you may already be a very good trader. So we're coming down towards the low of this range, but like I said, context is a little different, just being that we already kind of dipped and popped and rejected, and selling is a bit heavier down here now. So just look at the size of the buying on this pop, relatively small. We swept these pre-market, or this high from 930, and just popped and dropped. That's what I say. We kind of popped those highs and just immediately dropped, and look at the size of that selling. So I'm a little cautious here for that same setup that we already kind of had, and it didn't kind of drop as low and it didn't go as high. And now selling is a bit heavier down here. So I'm a little cautious of that setup now, just a heads up to you guys. But those are all like just experience, like context things that I put together of how price action is forming up for the setup. It can be the same setup at the same price, but context and stuff like that has shifted now, which completely changes the dynamic of the trade. It could still work either way. You know, it's just a probabilities game. Sometimes it does it, sometimes it doesn't. But I just know from my experience what works best, the best setups for me, and how price is before they happen. I just know from experience. Sometimes for me, that leads to analysis paralysis. That's one of the things that watching your stream and listening to your thought process helped me with a lot. Awesome, Anthony. I'm glad that has helped you. That's the whole point of me being here. Yeah, I mean, I could just be sitting here doing this myself, but I see so much just like nonsense and people flashing rented Lamborghinis online and then trying to sell you stuff. That's why I kind of like started sharing stuff online about trading, because I try to just be a little bit more real. There's a lot of selling delta at the lows. If that holds and we see aggressive buying, yeah, for sure, that could trap these sellers down here. For sure could, because there, like I said, there is a lot of heavy selling down here. But the only thing that I will say is we are spending a lot of time down here with selling. And on those quick pops higher, we really didn't spend much time. So just when we spend a lot of time building volume like that and we don't like drop trap sellers and then immediately start bouncing with aggressive buying, it could still work and it could still happen, and it very well might. But it's just not the best setup to me, because when I see a lot of volume built up of selling at the lows and I see quick pops that are not really trapping them and it rejects, especially if we continue to make a lower high here, then it just leads me to believe that because price is spending a lot of time down here, there is a lot of heavy volume down here, we probably are going to see lower prices, at least in the short term. Adam Johnson said, first time joining, appreciate the insight, Matt. Tons of value here. Thank you. Ishan said, Matt, not kidding you. What you just said is the reason I don't use Instagram or social media anymore. I feel like the only one struggling with trading, and sometimes everyone else is buying the Lambo. Yeah, I promise you that probably less than 3% like of people are profitable in trading. I think that's a well-established fact, like at this point, and it's very hard to be consistent. And I've struggled for a long time and haven't even, in the grand scheme of things, haven't been consistent, profitable that long. So don't feel behind. Like, one of the worst things that you can do is compare yourself. And I think I talked about this in a reel the other day on Instagram or a post or something. I remember talking about this recently. Yeah, regardless of anything, just focus on you. I love, like Umar Ashraf says this, like just your own pace, own lane, just do you. And that's why he's a G. Just don't get caught up in all that kind of hype. Focus on you. Probably 90+% of the people, flexing luxuries online are really lifestyle influencers and making money from selling something else and not trading. And I'm not hating on them, like, whatever, do your own thing. I'm not here to hate on anybody. I'm just trying to help other people be better traders and not get caught up in false expectations about this. This is one of the hardest endeavors that you can do. You can, like, the sky's the limit, but also know, like, it's extremely difficult. And just because the barrier to entry is so low doesn't mean it's so easy to make a lot of money doing it. It can, and you can, and the sky's the limit, like professional sports. But just understand, like, when you come in here to trade, especially day trade like this, you're competing with the best in the world, and it's a zero-sum game. You know what I mean? We're not everybody. If everybody made money, there'd be no market, right? Every dollar you make has to come out of somebody else's pocket. That's how the market works. It's a zero-sum game. So you're competing with the best in the world, PhDs on Wall Street at this game. So just understand that the barrier to entry is zero. Like, almost anybody can open an account, but the actual skill level and experience required to really be consistently successful is probably similar to the skill level of, someone that's a highly skilled professional in their field, whether it's a professional athlete, a doctor, etc. And I come from a background in engineering. You know what I mean? I was an engineer. I have a computer science degree, etc. So I know, and I was in the Marines as well. So I know, like, what it's like to actually, like, work extremely hard to be good at something. And that's what you just need to understand, is that it's not a get rich quick scheme, and it's not an easy money thing. It's not like that. So the barrier to entry is very low, but the actual skill required to be very good is extremely high and takes a lot of time. And so you just need to be aware of that and not have false expectations. And you can get that skill very quickly. There's nothing stopping you from doing it in just a few months, but just understand that that's unlikely. And for most people, it takes several years. And the fastest way to do it is just to do it the right way and avoid the early mistakes of oversizing and trying to flip accounts and trying to make Lambo money on a $2,000 account. Just size small, stay consistent, and learn the ropes, and then gradually progress. And then that's the fastest way is the right way. And pretty much everything else is not the fastest way, because it never gets you to the end goal. End rant. Hopefully you guys got something out of this, despite us trading in a 5-point range this morning or 7-point range this morning. Volume profile is very balanced, GK. Mason jar definitely helped me not take dumb trades. Yeah. I've seen you around for a long time, Mason jar. You've been around a while. I remember. I was trading for full time, like putting full time hours into the screens for several years before I really got consistent. Appreciate you guys all being here despite this boring price action. Middle of the range. Like I said, this week is a win if I help people just focus on risk management and not blow up their capital on a week like this. So do I pay attention to options flow? No, not at all. I'll look at the VIX for my analysis, but do you think you got consistent because of better technical analysis or psych improvement? Yeah, I think I've talked about this before in the past. I don't think one works without the other. So there's some more aggressive buying coming in now that could be trapping these sellers down here at these lows. This is some pretty aggressive buying coming in right now. We'll see what happens here. I struggle to initiate though on this setup just because we're right in the middle of a range. If context were different, I would really like context and location in the market were different. I would really like all this absorption here of these sellers, and now seeing this aggressive buying coming in, I really want to take this long. I would love to see a little pullback to take this long, but just from a risk versus reward, my risk would really be under at least the 05, so 5-6 points from here, and I'd really only be targeting like the 20s, 16 to 20s. So it's like 1-to-1, 2-to-1 at best. Just not, even though like I kind of want to be a buyer right now, it doesn't, the setup just isn't there as far as risk versus reward and location, just still being in the middle of the range. I mean, it could rally much higher from here. Like it could totally happen if we break out of this balance range and we go rally up to, yesterday's highs. That could totally happen. But the most reasonable, like I can't bet my trade on that because I don't think that's a reasonable, even though that's a possible outcome. It's not a reasonable target. To me, the most reasonable target is the 16s to 20s. And we have that low volume node I talked about in the pre-market around 21 to 24, where there's a very good chance sellers could reload there. So I have to be reasonable about that target, especially ahead of news today. So with all that in mind, like the risk versus reward of taking this setup here just doesn't make sense to me. Yeah. Life Buddy asked, when I see this as absorption? Yes, I would. And hopefully if you were tuned in, I just kind of talked about that just as far as location and what I'd be targeting and everything from here. This doesn't look great. If in the first like by 10, we had dipped a little bit further down here under these 05s, and we saw this kind of absorption over here, that would have been a nice setup for me to take long and go target those 15s, 16s, 20s. But we dipped down there quickly, popped, and then we've just kind of consolidated here with all this selling. Like I like it. I think we're going to go higher from here after seeing this, but risk versus reward isn't there for me. And we're in the middle of the range. So it's just not a trade setup for me. And that's part of the thing about trading is like sometimes you see a move kind of setting up that you want to be a part of, but there's just not a real good setup for it for you to get in on it. And it's just like, well, is what it is. Can't chase it. Just have to sit out, and that's hard to do. Like, I definitely think we could go higher from here and target 20s, actually even up to 21, 24s. But that low volume node area up there, but it's just location right now makes it difficult. How do you define your stops? Where is the best place to put a stop loss? Is it based on structure or heat map? A little bit of both. It's based on what would invalidate the thing that I'm using to confirm the trade. So like down here, if I got long in here and I'm seeing all this absorption down here, and say I got in at the 07s, I'd probably put my stop loss down here just under 05. So that's not bad. 2 points. And actually, maybe I should have tried that, actually seeing this heavier selling and then weaker selling here. This may have been a good entry point right here at the 07s, and then target those 15 to 20s with a 2.5 point risk. I was talking, wasn't super A plus anyway. I mean, it does look good now that we're seeing all this aggressive buying come in. But based on what I'm reading, as far as the level with technical analysis on the charts, as far as the order flow confirmation that I'm using the trade, it's where it's above or below that. It could be a swing high that forms, or it could be something that I'm seeing on the order flow that's confirming the trade for me. Just a bottom reversal or a consolidation fake out. So here at the low of the consolidation range that I've been talking about since the pre-market here. We didn't quite get below the low of the consolidation though. Just kind of a bottom reversal at the bottom of consolidation range. But for sure, risk versus reward is not here now for me to get in as far as what I'd be targeting. Just kind of zooming out though on the 4-hour chart, we are seeing a pretty nice basing period and potentially rallying out of it now. So it's one of those situations where the setup worked on the dip down at the 05s, but I didn't see enough for me to pull the trigger on the trade. But there was a lot of selling down here that failed to break down those 05s and stacked up, and now we're seeing the result of that. There was not enough. There's clearly enough passive buyer here to take on everyone that was willing to sell down here until there was no sellers left, and now there's no sellers left, and there's just people left that are looking to buy. And now we're squeezing out everyone that sold down there at those lows. So setup worked, but didn't see something for me to get in it. Unfortunately, we are ripping pretty strongly now. Pretty strong consolidation and pretty strong buying here. So we'll see what happens. We're coming up into that 20 level, 20 to 24 area. But after seeing this much consolidation and this much large aggressive buying on the break out of it, it also makes me a little less inclined to short up here at the 21s, 24s, but it could work too. So we'll just have to see how it develops. But a lot of consolidation and volume down there at the lows from sellers, and then pretty aggressive short squeeze. This is like a classic short squeeze. Passive buyer, passive buyer, passive buyer, short squeeze on the rally up. So now all of these shorts got stops, likely got run out on this. So they turned into buyers. And then everyone up that was left was pretty much buyers, because everybody that was trying to sell was selling down here. And this passive buyer clearly down here absorbed all of them. So we broke out the highs. Now we'll see if we get a break and retest on these highs of 16s. And if that happens, then, you know, price may want to go higher. VWAP here at 14, where this large aggressive buying was. And then we also have that key level that I've been talking about around 54.16, which was also around the overnight highs. But yeah, like I talked about since the pre-market, the A plus setup that I really wanted this morning was a dip into these 05s. And we didn't get quite enough dip and quite enough confirmation for me to take it. But despite that, the setup has worked. Marcus got in at 08, looking for a move up to 25. Awesome. Awesome. Very good. Yeah, I think, like, looking back right now, and just reviewing this in hindsight, we had all this absorption, and then we had a weaker bit of selling here around 07s, 08s. That would probably have been the best setup. After seeing all this selling get absorbed, and again, I was kind of talking here, but it's okay, because really the setup that I wanted, that I was looking for, was a dip down under these 05s, where we see this on the heat map. And we never quite got that. So, but just looking at this in hindsight, we had all this absorption here, absorption that made a higher low, and then again, weaker selling on this one. So an entry around 07, 08 is probably the best entry as far as confirmation. Risk under 06s, maybe 05s. So 2 or 3 points of risk. 08s, you know, probably targeting these 16 to 19. So 8 to 10 points of reward on 2 to 3 points of risk. And just speaking in hindsight here, guys, but I did not take the trade. Yeah, I agree with Max. Said the hard part with the absorption at the lows is that it also looked like there was buyer exhaustion at the 14s, and I agree with that. I think seeing this sweep fail here and then pull back with this heavier selling, it just made it like kind of very 50-50. If I would have seen this occur here, I for sure would have taken this trade. But this morning off after 9:30, but the fact that we already dipped to 05, we kind of failed above the 9:30 highs at 14, we dropped back with heavy selling, middle of the range. It just, like everything that I was talking through, you guys, yes, it worked this time, but it just was not an A plus entry trade for me because of everything I described. And definitely, Max, you're spot on. And I was kind of seeing the same thing, how we already kind of popped with all this aggressive buying and went nowhere, and then rejected with the heavier selling. It just made it very iffy is the best way I can describe it. It wasn't just like a clean, clear, like I'm stupid not to take this trade. And that's like the best trades that I'm looking for this week. Again, when my focus is like risk management, risk management, risk management, A+ trades, that's what I'm looking for this week. When I'm looking for that, I'm looking for the setups where it's like, I would be stupid not to take this trade. Like even if it loses, I'm still happy I took the trade because I saw everything that I want to see. I just have to put the risk on for the trade. So when I'm erring on the side of caution on a week like this, if I saw this pop fail and I got in long here, because, you know, I just thought the market was going to go up and it did this time, and then we swept out, I'd be saying, if we came and took out these 05s then, because I'm seeing this on the heat map, we saw the pop fail at the 930s, we saw the heavier selling building down here, I would just be saying, what the heck, why did I take that trade? Versus if I saw stuff so good that it's like, you know what, I don't, win or lose, the outcome doesn't matter, like this is a good trade, the setup's good, everything like that, then, you know, it's a good trade regardless, and if I lose on the trade, then that's okay. But it was very just iffy for me. Just overall context and confirmations was just very iffy. But it worked this time. Yeah, hard to repeat that setups. Yeah, you want to avoid the just this one time make money on this type of trade. You want to take the A+ trades where everything aligns, that you repeat day in and day out, not the this looks good. It's not everything that I normally like for a trade setup, but let me just try to make money on it this one time. That's a dangerous, slippery slope. Kellen Rock said, can you speak about your approach when do you go break even? I don't like to be stopped when still valid, but sometimes by this I can avoid a loss. That's a very discretionary thing. So I just know from my data, for me, like depending on the conditions, I'll kind of adjust it. But once price is like more than 5 points away from my entry, and most of my entries, I'm usually risking like 2 or 3 points, at least in current conditions. That's wider when volatility is higher. I'd say most of my trades are like 2, 3, 4 points of risk. So when I'm up like 2R plus, usually I'm either right on that trade or I'm not. And so I'll usually, and also once market structure shifts. So like in this situation, if I got an entry here at the 07s and my stop loss was under these lows, once we broke out this high at 13, so I'd be up 5 points, and market structure has now shifted. We broke this high, then I'd be pulling my stop loss up to break even at the 07s, 08s, because one, just structure, price action. We've shifted market structure in my direction. So if I'm right here, price should keep going higher. I shouldn't see a fake out and reverse back to my entry. Because if we fake out here and reverse back out down to my entry, there's a very high chance we're going to go take out these lows. So just in that situation, it's, as a general rule of thumb for the trades that I take, and everyone's different, you got to know your own data. But when price is more than 5 or 6 points based on like the current volatility we've been seeing in my direction, and / when price action, the structure of the market has shifted in my direction, I should be right on that trade. And if I'm not, then I'm probably wrong. There's no need to hold a loss at that point. So I'm only holding that risk at the beginning part of my trade because it's still like 50-50. But once the market has confirmed I'm mostly right on the trade, then based on the entries that I take with the type, which are very tight, sharp entries usually, I don't need that much breathing room once price moves in my direction because I'm usually getting in before moves occur. I think that's a good point to note is you just have to know your data and setups. For me, I usually get very, very sharp, tight entries before moves occur. So once the move does occur and moves in my direction, there's very little need for me to there's very little need for me to continue to hold risk because either I'm right or I'm wrong pretty much right away. But if you waited for higher confirmations and your entry is not so sharp as mine, then it would not be smart to move your risk to break even so quickly because you're going to just stop yourself out of a lot of good trades. But for me, because I'm very, very sharp with my entry, tight, and I'm getting in usually before moves occur, then I'm able to go break even pretty fast. Like as soon as market structure shifts in my direction, I'm up like 5+ points, then I'm pretty much break even on the risk, just because of my entry methodology on those most trades. But it's very important to note where you're getting in on the trade. And if your entry is not so tight like that, and you're kind of waiting for more buyers in your direction to confirm the trade, and you're looking for a bit of a larger move, then you probably got to be more patient and not be so fast to move your risk break even like I do. Just hopefully that makes sense. Yeah, we're rallying into those 20s. We just tested those 20s, 21s where that low volume node is that I talked about in the pre-market. So I'm not really looking for a long here at this point. Yeah, maybe it's a break and retest above that 64.16, and we continue higher, but just risk versus reward and probability of what I would have to target from here doesn't look super good, especially given the last 2 days we've sold off and made lower lows. I think if both Monday and Tuesday have made lower lows, the probability that you make another lower low on Wednesday is extremely high. But anything can happen here because we have FOMC rate decision coming up today. Also, remember what I've been talking about since the pre-market is I'm not really looking for continuation moves. I was looking for quick reversal scalps this morning because I am anticipating that the later we get in the morning, the closer we get to the FOMC rate decision news, volatility and volume are going to dwindle lower. So the probability of getting a continuation trade set up this morning, later in the morning, is low. Could it happen? Yes, 100%. Anything can happen. But probability wise, as far as looking to put on risk for a continuation move in the current context right now, ahead of the news, is not good. Not good enough for me to trade it. All right. Give me 1 second. I'll be right back. What's up, guys? Looks like price has done nothing. Same range, same spot. Nice little pop here over the highs into those 21s. Looks like buying has gotten smaller and less enthusiastic up here. These 20s, 21s. 230 lot negative delta now at the 18s. So definitely watching this to see what sets up here. How did you manage to learn trading while working on a 9-to-5 job? Does your 9-to-5 job prevent you from putting in work from 5 to 9? Say the thing that holds people back is not the 9 to 5, it's the 5 to 9. How do you manage time? Time block. Really, like for years and years, I was in my office from like 5 a.m. till way past 5 p.m. I also started working full-time after the military and did the same thing. I got a computer science degree while working full-time as well. So grinding all my life, like Nipsey Hussle. Kind of disagree with we the people. Like you can look to trade the pre-market session, look for setups that develop that. Futures trade like 23 hours a day, so there's opportunity there. I started out for a long time as a swing trader, so I actually was more into like swing trading options for a long time, just equities and options. So that is a less, if you do work 9 to 5 and you're looking to just trade equities and stuff, then maybe find setups. And I still do have setups for that, and I don't take them so much as often. But when I see a really A+ swing trade setting up, I will take a hit on it with options. And but futures trade 23 hours a day. You can find markets, even the index futures still. I think there's some good setups if you really focused on just trading, like maybe like 5 a.m. to 7 a.m. Eastern or 5 a.m. to 8 a.m. before your job. If I had to work in person and I was trying to like active trade, like day trade, I'd probably just be up super early and I'd be looking at the charts from like 4 a.m. to 8 a.m. and looking for setups that develop there. They're less frequent and you got to be more patient. There's less volatility, but there's plenty of setups that set up in the pre-market. I don't look to trade those now because I just trade like regular trading hours. So I focus my setups on that, but I could focus on setups for that like 4 a.m. And like London trading hours are typically, I see the most volume, I think, traded between like 2 a.m. and 5 a.m. So you could catch the end of that, depending on what time zone you're in, and try to catch the end of that and the beginning of like New York pre-market trading. So like maybe like 4 a.m. to 8 a.m. Try to focus on that time frame, something like that. I don't know. There's a lot of opportunity, either that or focus that time in the morning on charts and set alerts and stuff like that. And that's what I used to do years ago, is focus that time on like charting and stuff for a few hours in the morning, and then set alerts, and like you could just take those setups on your phone. Like that's what I used to do. I used to have an options account that I would set on my phone, and I would spend a couple hours in the morning charting and looking for setups. And it was more just swing trades, passive setups, not like this. And if I got the alert, I just take the trade, and it's already a planned setup, planned entry, stop loss, target, and everything. More of a swing trade with options. couple week out expiration, and that's what I would do. I think my first year doing that, I made like 700-800% on my overall account. It's Stelius. I agree, but I also disagree. Like it depends. Like it's definitely not as often that you get good setups overnight and in the pre-market. But if you know what to look for and you find something that works around those time frames, it may be different than what you normally would see in regular trading hours. But it's definitely doable. People do it. I mean, there's plenty of London traders that make money. So I don't trade Forex at all, but I know there's a lot of foreign markets Forex traders that trade overnight and stuff like that. But there's no order, not really any order flow on that. That would be a different, just purely price action strategy. But there's plenty of trader. You don't have to have order flow. It is key to how I trade, but I know I think this is the best way, smartest way, highest risk versus reward. But I guess really there is no best way, because there's plenty of people that have setups and trades that work for them with just price action. Definitely buyers are struggling at this 20 level. So those 05s and those 16 to 20s are still key. Same levels that I've said since the open this morning. Potentially. So I'm seeing on the footprint chart several spots where there's a few hundred lot order around 18, 19, 18. Yeah, 230 lots, 315 lots, 327 lots. There's a lot of buying up here. So if it doesn't break out these 20s and move higher soon, it could certainly set up for a sharp pullback. 14, 15s. I'm not looking at it. It's just kind of middle of the range. Like I said, on a different day, if I was looking for a continuation trade and I thought like the trend was up, so short term over the last couple days, we've been trending lower after making the gap up into all-time highs. We are testing a prior area of consolidation, and obviously long term over the last few weeks, months, etc., trend is up. But given today, ahead of the news, I'm not really looking for a continuation setup like that. And for me, looking for a pullback into the 14s now, especially after we've already hit the 20s, would be looking for a continuation trade, which could certainly work. And it could certainly, I don't want to discourage you. If you have a setup for that, by all means, take it. And there is kind of a lower volume area there at those 14s, 15s where price bounced pretty aggressively and broke out over the highs. So it certainly is a setup. But I would say, thinking about what I'd be targeting, let's look at some charts. So just thinking about what I'd be targeting would probably be like, I don't really even know, to be honest. Unless I'm like targeting all the way into the opening range from yesterday. We saw a lot of interesting activity yesterday around the 31s. We could go trade up there. That's where kind of sellers really started absorbing a lot. I don't know if you guys were on the stream yesterday, but I called out a short setup on that drop. I didn't trade it, but there was a passive seller at the 31s yesterday, 30, really that whole area from 30 to 35, and kind of called that setup right before the drop happened, but I didn't take it. But we could think about targeting that seller with longs if we reverse all the selling that occurred yesterday, which would definitely be a valid setup. So looking at the higher time frame balance range that we've been in for the last 3 or 4 sessions, that would be towards the upper end of that near all-time highs. So that would I guess that would, if we're going to speculate that we break out these 20s and move higher, that would be probably the next target area for me, would be around those 31s, 63, 64, 31. So negative delta on bookmap, you can see it over here on the DOM. This is the VPD, is the volume profile delta. So that's the delta between buyers and sellers at this price. When I was calling out those numbers a second ago, I was looking at my footprint chart, not this, but we can see that here. There's 448 lots of positive delta, 369 lots of positive delta, 264 lots of positive delta. So there's a lot of people aggressively buying at the market up here, but so far we haven't broken aggressively above the 6420 level. And if that continues, then it's likely that these buyers could become trapped and we reverse back lower. But if this buying continues and we overwhelm the passive seller here, there's clearly a passive seller here because all this positive delta and price isn't moving up. But if we get over that and break above that, then we could move up. Well, the problem, I guess the problem is there's multiple points that I see as potential resistance. There's this low volume node right above the high here into the 21s to 24s that I talked about, where sellers were really aggressive yesterday. So that could be a good target, but not a place that you want to initiate longs right here. But if we get above that, then there's that kind of key activity that I would say is a key level from the tape yesterday, which was around those 63.31s. Is really like that whole area, I think, between 63.30 and 35. But if I had to pick a specific level, I would say right around the 31s. But that whole area between 29 really and 33 is where I saw a lot of passive selling. So if buyers got strong and broke out above 20 and above this low volume node area around 23, 24, then the next place that I could see, next key level I have would be that 30, 33 area roughly. But to me, it doesn't look so great up here to initiate a long. This is better used for a target if I got long around the 05s, 07s, like that setup that I planned for this morning. Yeah, I haven't taken any trades this morning, and honestly, it's looking like I won't. Just where price is at. I may get on and just kind of watch things after FOMC, after the dust settles. I'm open to taking a trade if I see something A+ develop, but I'm not going into it with the mindset and the expectation that I'm for sure like looking to try to catch a trade. If something sets up, if something develops, then I'll take it. If not, then I won't. Pretty simple. The only thing that I really see right here as far as setup is if we broke out the highs and we tested these 20s. So I'd really kind of just be looking for this low volume node area to reject. And if we do, there was a lot of volume that traded down here, and I could definitely see us going and taking out the low of day again. If buyers fail to get over these 20s, I think we could definitely go take out the low of day, and just by the amount of volume that traded down here. Just because one, with overall context and everything, I'm not really looking for a continuation today. Two, this 64.20 level was right at the top of this consolidation range that we just swept out above. Three, there's a low volume node there from the selling yesterday, right above 20 into those 21s to 24s. And if I see a little pop here with a good entry confirmation, I may take a stab at that short and target a break back down into where we saw all the selling at these 07s and 05s. A lot of selling coming in here. Yeah, somebody short from the 1850. Yeah, that's great. If we got a little pop up there from here, I would probably be interested into shorting that. Not right here though, because I'd be risking like 5-6 points. But if we get another pop from here after kind of confirming the selling is present and seeing all this absorption here, if we get another pop back up here into these like 18s ish, then I'm gonna look to short that. But we may or may not, and it may just drop from here. We'll see. May not get that pop. May drop back down there now. Back in the middle of the range now, not where I want to be initiating. Damn it. Well, I was hoping like after confirming, seeing this heavier selling, we'd get one more little pop back up into here. And I would take it short here at these 18s. Somebody else caught it. Amazing job. Amazing job. Now here's all that selling coming in. I could totally see us going back down to these 07s, 05s, just because of the amount. Remember earlier in the session, I was saying how heavy the selling was down there, and just would not be surprised to see price trade down there again with how much volume there was. That could be right now. But if the buyers recover here where they were earlier and we go blast back up here strongly, I probably wouldn't hold the trade red anymore. Either it works now or it doesn't. Man, yeah, after seeing this selling right here that kind of dipped under this low, that to me really confirmed one, absorption, two, aggressive sellers. I was hoping just to see one low volume, just quick little pop, kind of stop out these first sellers, and I would have loved to jump in short here around these 18s. Did not get it, and just kept dropping further and further, so no trade on it for me. Remy short at 64.18. Yeah, good entry. Good job. Yep. So yeah, all this absorption here, and we had that 20 level sweep above that consolidation range high. We had that low volume node area from yesterday around 21 to 23, 24 area, which we just hit on this little impulsive pop. And then all this buying just got absorbed. So for me, seeing this buying get absorbed actually could have been enough, considering that we had a good level up here with the low volume node. I could have taken it short here at the 18s, 19s. I didn't. Waited to see the confirmation of really aggressive selling coming in. Got it. So the entry confirmation for me would have been just any quick little pop up here around 17, 18. I would have shorted, but didn't get it and dropped down. So short late 16s because I pressed buy instead of sell. I hate that. I've done that more times than I can count. Really nice. Really nice consolidation fake out setup right there. Unfortunately, we just did not get that little pop after confirming the selling. Would have just looked for a little pop to take it short. Did not get it. SMT iceberg setup. I'm not familiar with that term. But I call this just kind of a consolidation fake out setup. We had that low volume node area up here where sellers were previously aggressive. Had this impulsive rally up here, went nowhere. These buyers got trapped. And then the buying just dwindled, was not enough to break through this level. Great short opportunity here. Ah, man, Blair, moved your stop loss too soon. Yeah, 1850 was a fantastic entry right there. There's a 205 lot positive delta there that got absorbed right before the drop. That was a great entry. One thing that's tricky that I've noticed about shorts is sometimes, and that's why I kind of wait to confirm the selling and then I wait for another impulsive pop back up. That's kind of an adaptation that I've done for these setups now, because so many times I see like multiple stop hunts on sellers before the drop comes, especially this year and last year. So now that's kind of what I look for the setup. Didn't happen this time, obviously, but yeah, many times I'm a little bit slower about moving my stop loss up on shorts specifically, because what I've noticed is just many times we'll get the little drop and then we'll get a stop hunt right back up to my entry, but not to my stop loss. That invalidated the trade, and that'll happen several times before the drop comes. And so I'm a little bit slower to move my stop loss to break even on the shorts until that hard heavy drop comes. So like seeing this hard heavy drop here, I wouldn't want to see this fail. But once that hard heavy drop comes, as soon as that happens, then I move my stop, because then it's like usually the drop happens or it doesn't. But initially, in that initial phase, like up here, so many times I see it start to drop and then I see a quick impulsive pop that would come back up here. So I wait for that absorption and then that quick impulsive pop, and that's where I look to take it short. Didn't get it this time though, it just dropped. So yeah, Victor, in my mind, shorting is 10 times more risky. I have definitely, I'll be honest with you guys, the past year or two, like 90% of my profit has come from longs. And I mean, if you just look at a freaking chart, you can see, other than that crazy drop that we had on the tariff news earlier this year, the market has just been up, up, up. So trying to call a top, trying to catch shorts has been very difficult on the indexes. Index futures, in my opinion, it's been far, far more repeatable to just catch bottom reversals than, for me, for how I catch trades. And so my adaptation to short setups is, like I said, I wait for that impulsive pop for the entry, and then I'm a little bit more patient as far as moving my stop loss to break even, because I typically see several of those impulsive pops that kind of stop out first sellers multiple times, and then the drop comes. And when the heavy drop comes, I look to just take profit and not look for a big, large continuation, because so many times over the last 2 years, we've seen that V-shaped bounce, and trying to hold for downside continuation has not played. So here is some large selling coming into those 05s again. There's the target. So the setup for me is invalid now. If we went back up to those highs, I wouldn't be looking to short it, because we've already come down and hit the target, which was those 07s to 05s. So no trades yet for me today. Two setups that I watched, both the levels. Like, if you remember the levels that I talked about from the pre-market, first one's the 05 area and the other one was the 20 area. That was the bottom and the top. But again, have to wait for my confirmations to take the trade. In this case, it just didn't look good before it squeezed off to get in. In this case, for the short setup, it looked great. And the entry that I was looking for after confirming this aggressive selling was one quick kind of impulsive pop higher to take it short here around these 17, 18s. We started to, looking at right here, we just just couldn't get any higher. If this would have popped just 2 points higher, I would have taken it short. But that's the difference between, 18s up here would have been just 3 points of risk, and down here would have been like 5-6 points worth of risk. So that's literally double the risk on the trade setup. That it completely changes the trade setup. So a lot of large, heavy selling. Here's those bids that we saw earlier at those 05s. So now we really did take the sweep out of those 05s, and those bids filled. That was what I was looking for. That did not occur for the long setup this morning. But with the heavy selling, the problem is now trying to look for that setup. We already hit the 20s and rejected. So like my target's already hit for that long setup. So for me, not as great of a setup, or really not a setup anymore, because we've already gone and hit the target that would have been the target for the trade and rejected back down below the entry. So pretty stout selling coming in. But again, like we have FOMC rate decision in just a couple hours now. And so typically, not always, this could be different, but a lot of times what I see is like these large impulsive moves. If you're not already positioned for it, they tend to lack continuation. And then they you get the larger move. If you're a part of it, great. If you're not, if you chase into it, it tends to flatten out. That's just my experience. This one could be different. There is a lot of heavy selling. We could keep dropping for sure. So we dipped under those 05s and some pretty aggressive buying here. So here's those 05s. We dipped down, still above those 02s, and some more aggressive buying coming in now. So tough to say. If we hadn't already gone and taken out those 6420s and rejected with all that heavy selling, then I'd probably definitely be looking to long this here. But context is a little different now that we have gone and taken out those 6420s and rejected. But I do like this, all this selling into these 05s now. We took out that low right here where we saw all this, and I saw that heavy volume. This bid was sitting down here still, so I just thought it was very likely that we go and trade down here. We did. We filled that bid now. That was there. He did get filled. So far, lacked continuation. We're still holding above 6,400. And some more aggressive buying coming in here off that. So this is definitely a bottom reversal thing that I would like to see here. I would say the one thing that is very much holding me back is that we already went and traded the 6420s and rejected it. But I do like how we're still holding above yesterday's lows, above that 6,400 level. We've now taken out that 6,405 into that bid and holding. So I really kind of like it. But the one big drawback, though, is that we already went and took out those 6420s and rejected. See what happens though. If we get one more drop here and I see something really aggressive from buyers, I might take a try at it. But I would probably have a closer target and maybe just target like this middle of this opening range here around 64, 10, 11, 12 for just a smaller, closer scalp, just targeting kind of a bounce back into the middle of the range. We'll see if we get one more drop here. And if I see some really aggressive activity from buyers on a little drop here, then maybe I'll take a stab at it and target those just middle of the range, 10, 11, 12s. You definitely got to be just very, very selective and sharp with dealing with a consolidation range like this ahead of news. So if we get one more sharp pullback here and I see some really aggressive activity from buyers on the drop, then I'll definitely look to long that and just target a bounce back into the middle of the range, that low volume area between, actually kind of between 12 and 15. That's where I'm kind of seeing that lower volume area, middle of the range. So if we get another pullback, there is a 300 lot negative delta that just popped up at the 05s, which is right where this pullback occurred. So if we get another sharp impulsive drop here and I see some pretty aggressive activity from buyers defending another little pullback, then I'll look to take a stab at that. And VWAP is also here around 14, so I would probably just target a quick pop back into these here, 12 up into 15. There's a lot of bids sitting here, so we'll see what happens. If we get another impulsive drop that fails to break down the low, yesterday's lows above that 6,400, 6,401 key level, double bottom here. So double bottom, aggressive activity from buyers would be interesting for me to take it on a bounce back into 12 to 15. If we bounce straight away from here and I don't get another pullback and we bounce straight back into this middle of the range, 14, 15, then I'm going to invalidate the setup. Yeah, even if the targets was already hit, because what I'm kind of speculating here, Kellenrock, is that we're just going to continue to trade in this range going into FOMC. So I'll fade the extreme of the range and just target the middle of the range instead of the high of the range. We already took out the other highs. So I wouldn't be greedy for that target. I would just take this one more, fade the extreme of this dip under 46.05 and just target a bounce back into 64.12, 64.14, which is where VWAP is. There's also kind of a lower volume area where price kind of traded quickly up and down through. But looks like we're already starting to bounce back towards it and not getting one more impulsive drop. So we see this larger selling here into that dip under 64.05. Bid got filled here, lacked continuation, aggressive buying up. Could have taken it right here. Could have taken it right here at 05s, 06s. But I would have liked to see just a little bit more speedy drop with little lower volume. and a little bit more speedy, aggressive action from buyers to bounce it back up into those 12 to 14s. But if this impulsive selling failed now above these 6400s, that was a pretty large drop. And I would say very high chance that we just continue to stay in this range until FOMC rate decision. And there's not a ton of large enthusiasm from buyers here. We got absorption and bounced, but just look at the size of the bubbles and the pace. Can you guys feel how slow this is just watching Bookmap? Just kind of feel how slow it is on this bounce. Victor, you caught it from the 04s. Nice. Yeah, would definitely be defensive if we quickly trade back lower than that. If we do get an impulsive drop again, I am looking, but it's okay to miss moves if you don't see a really good setup. No, more and more people are probably just walking away after this morning session with the volatility and the location that we've seen. So that's not a bad move. Kellen Rock, the answer is both. I prefer to enter on a pullback, thread bubbles, but the answer is both, and it just depends on when I click into it and adjust my stop accordingly. Anybody else have any questions you want me to cover this morning? Anything trading related from the session, analysis, anything trading related in general, let me know in the chat. I know this week so far has honestly been a little bit boring, but starting off slow. Just got to be patient for good trades, though, especially on a week like this, like I've been talking about all week. How do you go back and review past data on Bookmap? The replay feature, you have to save, you have to have data. Someone can give you that data. Joe, I have so much data from the years and years of Bookmap. You need the Bookmap file to load it in, but I may start a Google Drive public and share it for you guys, and I'll send you the link if you want. But it's going to take probably hours for me to upload all that data. And you can load the replay feature on Bookmap, and then if you have that data file from somebody that's recorded, then you can pull it up to replay past past days. I have probably the last several years of data recorded from everyday trading. Okay, here's some interesting activity. On that little drop there, a couple hundred lots of negative delta. If these sellers can't break down back under these 05s, see what happens right here. Problem is there's just not definitely like some absorption triggering right here. It's just not a ton of really enthusiastic reaction from buyers. So very kind of pivotal spot right here to see what happens, how this reacts. There's just still a lot of heavy selling starting to come in and not a ton of reaction. Yeah, more heavy selling coming in. So this is interesting here. Buyers attempted here at these lows under 05s, but looks like there's still just too much selling coming in right now. Excuse me. It's kind of very slow and lackluster, so it's a little tough to read. Looking at the news headlines that have come out, I don't see anything too significant. I like how we kind of double bottomed here now, but I would say what's a little lackluster is just the size of the orders. Volume is just not there on both sides. Like after this drop, heavy selling, buying initially looked aggressive and then just kind of dwindled. We dropped, selling just kind of dwindled, popped, but not really large aggressive buying on this pop, dwindling. This is kind of what I was talking about earlier, guys. I don't know if you remember, just in these conditions ahead of news, that large impulsive move, and then it kind of lacks continuation, and then just kind of goes flat. So it's like, oh, drop, flat. It's that red light, green light game that I was talking about, of just kind of quick drop, and then volume and volatility just kind of dies out. It's exactly what I was talking about earlier, if you guys remember. If anybody's been on since the beginning of the stream, that's the exact thing that I said to really watch out for in these conditions ahead of the news, is just those quick moves and then really gets flat. Really gets flat and dead after those moves when we're pending some big news. All right, guys. 2.5 hours into this stream. I think I'm going to call it a day there. I don't like the volume and volatility just really dying out. Had a nice little pump off the open, off that 05 level, nice little drop off that 20 level. Just didn't see good confirmations to take any trades. So no need to force anything. In my opinion, the quality of taking a trade is getting lower and lower after 11 a.m. coming up on that 2 p.m. news. So I'd watch out for that. I'd watch out for the volatility after that news. I don't try to get caught up into it. On a macro level, just zooming out, what I'll be watching for, I'll probably take a gander and look and see if anything sets up really nice after the news. But just zooming out on a macro level, that key area that I've talked about multiple times now, if we get a nice drop after the news, that 63.83 to 63.74 area, it's about 20 to 30 points lower. If we get a drop down there, I'll be interested in looking if buyers support. If we get a strong rally, I don't really look to fade a strong rally in after the news near these all-time highs. Yes, we've seen selling the last couple days, but overall we're still very close to all-time highs. The market's been uptrending, so if I see a kind of a break and retest to the downside in the short term, if we break under these 6400s and then pops fail, then I may look to take that for just a quick short scalp for a drop down to those 63, exactly what I was talking about. First, under prior day lows, so around 63.90 from last Thursday, or Thursday the 24th. So I would target that if we do get that, and then into that 63.83 area 63.74 area. So that kind of 10-point range is what I'm watching for if we get a kind of an impulsive drop after the news. And then to the upside, if we get a breakout above that 64.20s, there's that low volume node there that I talked about. That's kind of an area of resistance. It was a consolidation high. So if we get a break and retest above those 20s, then I would potentially long that, targeting that seller at the 64.31s. Sorry, did I say 63? 64.20s into those 64.30 to 40 range, which was yesterday's highs in the pre-market there. So that seller at the 30s into the 40s. Yeah, so that's kind of why I'm looking to end this here, Joe. I'm kind of burning myself out watching this, hoping for something to set up, and I'm not looking to trade on hopes and wishes. Conditions just aren't looking good anymore. I gave it a chance for a couple hours this morning. We did get the bounce off the 05. We did get the drop off the 20s. I didn't see a great A+ thing for me to get in on it, so I sat out. I've given it a chance for 2.5 hours here, and gonna walk away. I store all my bookmap data locally on my computer. Cursor last. Yeah, so don't burn yourself out in this kind of stuff. Don't blow up capital on low quality trades for no reason. There's plenty of opportunity in the future. There's going to be lots of better conditions, hopefully after the news, high impact news. A lot of people are sitting out for that, waiting for things to develop. So don't hurt yourself for no reason. Don't burn yourself out. Thanks for tuning in. Super helpful navigating price action. Thank you very much for your time. Thank you, Dogfish. Thanks for everybody joining in. Drop a like. Appreciate that. If you guys enjoyed, got value out of this, like I said, didn't take any trades on my end, but not here to try to share signals, trying to help you navigate price action, order flow, all that kind of stuff that I do. That doesn't always mean chasing action every minute of the day. So Stelios, Richard, thanks for joining in. Appreciate it. Benjamin, thanks for joining in. Appreciate you guys. Tomorrow we'll be back live again. Like I did yesterday, I called that setup yesterday, which I did take in the afternoon because nothing good set up in the morning. But I did post a recap on that. I don't always post a recap on every trade I take, but since I'm doing the lives every day this week anyway, I will share updates with you guys on all the trades for the week, because I'll post a recap at the end of the week. So you guys know the game plan, you know the levels and setups and everything that I'm watching for the rest of the day after the news. Yeah, just be cautious in the middle of the range here, guys. Don't get chopped up. Don't waste your capital. Don't burn yourself out. All right. See you guys. Thanks for joining in. See you tomorrow morning.